Homeownership is a dream that's real for most individuals, at least at some point in their lives. But over the past couple of years, this has become increasingly difficult. And unfortunately, more people seem to be viewing homeownership as more of a pipe dream rather than maybe a real dream that's concrete that they can visualize and see the finish line on. I mean, even back only a generation or two, the time that it used to take people to save up for a 20% down payment was significantly less than it is today. And bidding wars weren't as prevalent as in today's market. In fact, according to Global News, the average time that it takes to save up for a 20% down payment in certain areas across the country can easily exceed 20 years, which is major. And for a lot of people, that would easily put their first home purchase in their 40s or 50s, which honestly is completely unacceptable. Of course, if you do watch my videos, you would know that I'd always opt for a 5% down payment, or pretty much as low as you can go really on that first property for a variety of different reasons. But regardless, the idea here is that overall home affordability is significantly lower than for previous generations. And the idea of home ownership has become pretty bleak for a lot of first-time home buyers. Even in one of my most recent videos, we looked over why the market's so hot and difficult to buy into, especially for first-time home buyers. And ultimately, the real reason here was that the affordability gap was just getting larger and larger. At the end of the day, the average income in the country is $55,000, and wages just have not increased at the same price as asset appreciation has, making that gap just larger and larger year over year. This right here is a chart that we have looked at previously, but it just really showcases how much the asset prices have appreciated relative to the increase in wages. So that gap is just getting significantly larger to the point where for most first-time home buyers, it's just out of reach, unfortunately. And even the idea of a starter home is kind of a thing of the past in multiple different areas of the country, where 2-3 bedroom places are still carrying $2,500 a month mortgage payments, and that's not taking into account any of the other factors and costs associated with maintaining a property. So this is basically squeezing more and more individuals to stay renters for significantly longer than anticipated. Hey everyone, my name's Griffin, and this channel is meant to help you better your personal finances. So as a millennial myself, well, seeing this issue being just so prevalent, even in my friend group, well, I wanted to make a video speaking about the data to really highlight the fact that this isn't something that you're alone on. This is a problem basically across the country, even in North America and other countries right now. And regardless of the fact that the market is extremely hot and the idea of home ownership might seem kind of far-fetched right now, there are some things that can be done to try and alleviate the stress and then also save towards that first property. Now, in terms of millennials specifically, these are typically going to be the average individual who's looking to become a first-time home buyer. And the effects of the pandemic have been devastating for a lot of millennials as well as Gen Ys, but specifically millennials, because these are individuals who may have lost out on their jobs and also had other financial repercussions following only 10 years prior the financial recession of 2008. So this can be a really difficult time for millennials. In fact, in 2020, millennials only owned 4.6% of the nation's wealth, which is significantly down from previous generations when they were in this same age bracket. And the thing is, this absolutely is a problem, sure, right now, but also longer term, because even though a home isn't necessarily an asset when we actually look at what an asset versus liability is, but the reality is that we know that home ownership and equity in a primary residence represents a massive portion of lower and middle net income families and individuals. So not being able to access a home right now earlier on in life is extremely detrimental for the long-term growth of net worth over time. Right, so this is a chart that we've looked at previously on the channel, but I just absolutely love it, and I think it's really important to look at and remember. So we can see that all the way up to the net worth tier of around $1 million, the primary residence represents a significant portion of assets. In the $100,000 range, it's probably around 50% or more. So this is absolutely fundamental in growing your longer term net worth, especially when you're earlier on in your life. And if we take this even one step further, with inflation running rampant where it is right now at around 7.5% across the board, well, we know that one of the best ways to hedge against inflation longer term is through home ownership. So again, bottom line, owning a home is one of the most powerful wealth building tools for the average individual. In fact, in Canada, the average house has 75% of its market value as equity, just sitting there dormant, which would be a huge tool to further build wealth due to the forced savings mechanism of a property in the first place. And really, it's that home equity that's just sitting in most properties, dormant, doing absolutely nothing, that I've spoken about quite a bit on the channel as being a really powerful tool that most people don't really realize, but can use to further grow and exponentially grow, I should say, the value of their net worth, but also their investment portfolio. portfolio. So again, not being able to purchase a house is really crippling for the current generation that's being squeezed out of the market. And before we dive into some concrete things that can maybe be done on your part to help get into the market, I want to quickly speak about renting versus buying, because I can already see people in the comments saying that renting is going to be a better option than home ownership. Now, here's the thing. I've been a renter multiple times and have also purchased a home. If you purchase a home strategically, like we're going to be speaking about later, well, I absolutely think owning a home long term is going to be the better option. But even on a comparative basis, okay, if you're able to rent, let's say for $2,000 a month, and your mortgage payments are going to be, let's say, a little bit higher than that, let's say $2,500 a month, all in, your home is going to cost you. Well, sure, you might be saving $500 a month on paper from an actual cash flow out of your pocket standpoint, but I would argue that the average individual really isn't disciplined enough. Unfortunately, even if you think you might be, most people aren't disciplined enough to save that excess $500 and invest it for the long term anyway. So again, I would argue that home ownership, the forced savings mechanism and principles of paying down a mortgage and being forced to make that payment, building equity in a property, is one of the most powerful things for, again, the average individual. And to that point, I would even say that renting long-term for decades is one of the worst things that you can do for yourself financially. Reason being, when you're renting, you're not building equity. And over time, I've looked at different scenarios and I've also analyzed various different people. And if you're not owning property, this is extremely crippling financially, because you're not building equity and you have a lot less options available to you later on in life, because you basically have nothing to show for. So unless you're a very rare case where you're making a ton of money yearly and you're cash rich, well, it's really through acquiring assets and building equity in assets that over the long term, you're able to more easily become wealthy. All right, so considering everything we've just looked at, it might really appear like the future is bleak for first-time home buyers. I'm not going to say otherwise. It's difficult. And in fact, a lot of people in my circle and my friends are really experiencing this problem right now. So let's speak about some things that can be done. And by the way, if you're enjoying today's video, make sure to smash the like button. It really helps my channel out. Let's get into it. Is it harder right now for people to purchase a first home? Absolutely. There's no other way of putting it. It is way more difficult right now than even, 10 years ago. But this is the current reality that we have to live with. And you need to reframe your ideology and way of viewing things in order to just make things happen and get ahead. All right. So one of the first things you can do, and of course this doesn't apply to everyone, but we're seeing it a lot more in today's society where people are staying at home with their parents or maybe even their in-laws for a longer period of time, therefore to save money. Again, this isn't something that applies to everyone, but if you are able to do this, this can be a concrete way that you can save significantly more money towards a down payment, right? I've been moved out since I'm around 20, so that would make it around 5 years at this point, and I can comfortably say that it is extremely difficult, especially when you're a renter, and I was a renter for basically 3.5 years. It is extremely expensive, the cost of living, and it becomes a lot more difficult to actually, again, build up any equity as well as savings when your expenses are extremely high. Right now, rent is crazy high. We're seeing the cost of food going up like crazy. So again, this is the way that you can save hundreds, if not thousands of dollars every single month towards a down payment on your first property, even if it's only for an extra 1 or 2 years. There's even this guy I really like to watch. Again, he's called Thatch. He's a real estate investor up in Seattle, and he says he stayed at his parents' house till he was 30 years old and was making hundreds of thousands of dollars a year and had multiple rental properties. Of course, that's an extreme example, but there's no shame in doing this. It's becoming a lot more common in today's society considering the cost of living. Number two kind of goes hand in hand with the first point, and that is that if you do choose to move out, especially at a younger age, you need to be willing to accept the fact that you're going to eat it for years, and you need to be willing to work your off for potentially years. Again, I had 2 full-time jobs essentially for 2 to 3 years. I was working full-time at my government job, and then I was coming home and working full-time on this YouTube channel as well as my other businesses at the time, and trying to learn as much as I could, absorb information from books, courses, videos, everything I could do in order to try and get ahead. There's really no other way of putting it. So many people want a magic pill, an answer, a secret, but there's no other way than you need to be willing to try multiple different things and work your butt off to get there. Get that extra job, work those extra hours at work, start a side hustle, stay consistent, and just don't lose that focus and consistency as well as drive towards achieving your goals. So that's number 2. You need to increase your income in any way possible while also accepting it's going to take probably 2 to 3 years to do this. Number 3, don't even look at homes that are turnkey. Like seriously, you need to be purchasing a property that's a complete fixer-upper. This is what I did. I purchased a home that in the neighborhood, granted, yes, it's gone up since then, it was a dive kind of like you need to be completely renovated. In fact, I'll leave a link to a video I made going over a before and after, but it looked like it was a time capsule. It looked like it hadn't been touched for 50 years because it hadn't, right? I had to gut the whole thing, renovate it, and I got a renovation loan. A renovation loan is a way that you can go and get money in order to do renovations at a low rate that matches your interest rate, and then you pay it over the entire amortization of the loan, in this case 25 years, right? So again, also though, $500,000 for example on a property might seem like a lot, but 5% down on that is $25,000. Yes, that's a good amount, but based on point number 2, you need to be willing to work double time in order to save up for your down payment. So that's something to consider. Purchase a fixer-upper. Don't look at anything else right now. Moving into point number 4, you're already only looking for properties that need a significant level of renovation. That's great, but then on top of this, is this a property that you can maybe add a basement unit to in order to charge rent and therefore offset the cost of your housing on a month-to-month basis, right? The reason why I'm saying this is because previously I spoke a lot about house hacking. I still think this is 100% a fantastic way that you can offset your cost of living and basically with this better yourself financially. But the cost of duplexes and other multifamilies has skyrocketed in this area, but then also pretty much in all the metropolitan areas I was able to get data on across Canada. So now looking at maybe a fixer-upper single-family home that you can, for $50,000 or maybe a bit more than that depending on the size, but put a unit in the basement, well now you can charge maybe $1,000 rent, and this will significantly offset your own cost of living. That's a way that you can start getting creative, and it's a way that you can house hack in a somewhat non-traditional way. And by the way, before I have anyone in the comments saying this is out of reach, I have some buddies who are doing this right now. They purchased a home, put a unit in the basement, and are now charging rent. So it is something that is achievable. Next up, if you're not able to get approved for a loan, reality is that there's not much that can be done. Either A, improve your income, try to stay consistent with a job, or therefore also have self-employment income that is consistent for at least 2 years. Other options could include getting, say, a parent or someone else who has a better credit history and score than you to co-sign on the loan. I know this isn't applicable to everyone, but this is something that a lot more people may be willing to do in a parental situation, considering where the market is right now. So definitely having that conversation could be something that would be highly beneficial in order to, again, buy into a house now for that long-term growth in equity over time. And then finally, I'd say don't be afraid to use all the money that you have in your other investments in order to fund a property, all right? So for example, your tax-free savings account, your RRSP, if you have an RRSP or any capital in there, you can actually pull it out completely tax-free up to $35,000 under what's known as the home buyer's plan. Basically, you then have 15 years to pay it back to essentially yourself. And then also taking your money out from your tax-free savings account, sure, you're going to have to recontribute that money back into it in order to, grow that money tax-free over time. But I would argue that purchasing a home, based on all the data we looked at earlier, being one of the primary wealth driving vehicles for the average individual, is going to have a much larger concrete impact long-term on your financial situation, but then also just your peace of mind of knowing that you actually have a property that you own instead of renting for potentially decades. So hopefully some of those tips can help you secure your first property. If this is a problem that you're facing, make sure to comment down below any of your questions and comments. I'll make sure to answer as best as I can. If you enjoyed the video, make sure to smash the like button. And also in the meantime, today's video isn't sponsored or anything, but if you are looking to maybe buy into some property, then make sure to check out the link down below in the description to Addy, where you can basically buy $1 shares up to $1,500 in properties across Canada. It's not real estate, but I consider this to be paper real estate, and I actually have stake in around 4 different properties on their platform right now, spread out across Canada. So again, if you use the link down below in the description, you'll get $25 for free, and that is going to cover your first year's membership cost. So on that note, thanks a lot for watching, and I'll see you in the next one.